following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We got a big jobs report. What else can there be said today? We're gonna have to look at the S&Ps. We're gonna look at the notes. We're gonna have to look at the reaction. We'll actually be doing the show while we're having these events unfold. We're trying to get Joey on. That's why I'm a little discombobulated here. I think we're probably going to get him at some point. And we're going to talk a little bit about China again. Looking at the futures section, if you guys are looking at the scanner right now, this is a sea of green for the most part. We're going to have to throw out the VIX. That's obviously been coming off slightly, to say the least. But we've got a sea of green in most commodities going across the globe here, at least on an intermediate down into the shorter term time frames. What's his in the middle of your chart? Okay, let me reset my chart here. Okay. We plan to have on Joey. We're going to see what happens with that. But as we're looking at our futures section of the scanner, we're looking at a sea of green again across the board here when it comes to intermediate down to shorter term time frames. We've talked about a commodity rally, and we've talked about that stake in the ground on crude oil for a while here. And looking at things relative to profiles, what we want to do is, when I talked about a sea of green and these, even the gray cells with the arrows up, I apologize, guys. We're trying to coordinate this. We're looking at these arrows up even when we go into the futures section and we see some of these gray cells. Most of the arrows are also still up when it comes to looking at the stocks or instruments that are within the balanced areas. So that being said, and going back into something that's near and dear to everyone's heart who's probably watching this show, we're going to take a look at gold, the inflation hedge, so to speak. And, I couldn't refuse or deny the action that's happening. I'm getting frustrated here, guys. We're trying to keep our chart on the screen here. I couldn't deny that the action when we got above 1,200 an ounce and we came back and retested and then really consolidated here, that we were going to have another move. Okay. All right. Technically, we're going to shelve anything having to do with Joey right now, Al, and we're just going to continue the show. So as we come back and retest 1,200 and we consolidate around here to move higher, that was something that technically was looking relatively ripe. I had been bullish on gold, as a lot of people, or as I guess I should have been in the past. But as we look at this now, and we look at the commodities rising, you could look at gold and say, you know what? It's got a better chance than ever in the past couple of years to really actually have a sustained rally. But what we're looking at right now is we're looking at the top of our profile on our weekly on the April contract, and we're looking at this 1264 rounded off area. We're sitting at 1265 right now. We've overshot it a little bit here this morning and actually yesterday afternoon. But remember, that's a big thing to keep in mind. And a lot of times these fair auctions, a lot of times these fair auctions will get fully explored. And, we haven't had a lot of retracement on a long-term basis. We had one back into 1060, if you remember. And as we look at this, And I understand that we've kind of crossed the border on Navigator for the first time since October 2014 or September 2014, above zero here. But again, I'm looking at this inflection point going, we've had a pretty good run. If you look at it plainly, we've had a 20% move up in gold. And when we look at the top of these inflection points here on our weekly, we've got to pay attention to them. So, gold can move 50% up and, with no problems. You guys have seen this thing come unglued before. But, I think this is a time, gold has a tendency to break people's hearts, in my opinion. And as we look at this inflection point, we've just got to pay attention to it. And we almost have to sit here now. We've reached some targets, just like on the S&Ps when we reached 1975. You've got to pay attention to these inflection points. This is the top of the balanced area. And as we look at this, we might have to just wait and see where a weekly close happens now. You don't have to be in the market all the time. And if gold spikes up, there's a great chance if we have a weekly close above this 2064 area, then we could have a retracement back into that inflection point. The train, might not be leaving, so to speak. You're always going to get support areas to buy it later. So in my opinion, it might be time, especially with this report coming out, just to sit tight and kind of be happy with what's happened on the north side since 1200, if that makes sense. Whew, man, sorry to open the show a little discombobulated there. Here we go. All right, so and Joey's asking to call him again really quick if you can, Al. All right. So that being said, and moving right into the June contract of the Treasuries on the 10-year, we have this breakdown on the daily, and we're Okay, Joey's on. Are you there, Joey?
Yeah.
Whew, man, I was so mixed up trying to start the show. I thought you were going to be there. How are you? Hello. All right, we've lost him again. Okay, we're going to... Okay. All right, I'll tell you what, we're going to try on the break. Whew. Mixed up Friday here. So as we look at the notes, and we're trading below 129.21 right now, this is the issue. There's a big support area on the June contract right at this 129 general area. So again, I'm kind of suggesting that since we're in this DMZ, below profiles on the daily, sitting at the bottom of a profile on the weekly, we want to just kind of trade the reaction after this report and kind of look at gold, look at what the S&Ps are doing. Obviously, the S&Ps have ratcheted up significantly above 75 this morning. But we could have a sell the news situation on the S&Ps. We could have a lot of different weird reactions that are going on. So we're going to talk about that after this next break. Whew.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hello? Yes. Hello? I'm still here. I think we're waiting to connect with John. We temporarily lost connection with him. So just stay with us if you're listening. I'm not sure if anybody's hearing anything, but just stay with us, and we're going to try to reconnect with John. And he should be on with us momentarily. I think I'm coming from Hong Kong, so I'm gonna as soon as John gets back on, we're gonna talk a little bit about the Chinese markets. Yes, okay. Welcome back.
Sorry, I've had a slew of technical issues here this morning. I apologize. It was causing me to stutter and stammer earlier. How are you?
I'm doing well.
Good.
You call those technical issues, huh?
Yeah, exactly. Hey, listen, I thought it would be kind of interesting for everybody to hear. They talk about a lot of things, just acronyms and different phrases that on CNBC and Bloomberg and things like that about China A shares, B shares, the Shenzhen exchange and the Hong Kong and the Shanghai. How do those things? I thought it'd be nice if you just explain how a lot of those things interconnect and what some of the definitions really are.
Oh, sure.
Great.
So, back in the old days, I guess just as of last year, even with all the capital controls and everything, the Hong Kong markets were very separate from the local Chinese markets in China. So Shanghai and Shenzhen are the two markets in China, kind of like Nasdaq and and the New York Stock Exchange. The Shenzhen market is more like the Nasdaq because they have some of the startups and some of the technology companies on there, and the Shanghai market is the NYSE with all the blue chips on there. So whenever the markets are screaming higher, you'll see the Shenzhen market actually outperforming because those are the higher beta stocks, the growth stocks and stuff like that. And then the old economy stocks are mostly listed in Shanghai.
Okay.
Now both Shanghai and Shenzhen stocks are called A shares because they're only available for the local Chinese investors with renminbi accounts. So the local currencies accounts can trade in A shares. That's their local market. There was currency restrictions to trading Hong Kong shares and also H shares. So Hong Kong shares, H shares also traded on the Hong Kong Stock Exchange. The reason they call them H shares is that they are Chinese companies, doing business in China and registered in China, but listed in the Hong Kong Stock Exchange. So those are the H shares. So like a China Mobile, for instance,
Okay.
are listed in Hong Kong and also listed in the NYSE, I believe, as an ADR. So, but that is a Chinese company listed in Hong Kong and listed as an ADR. And then there's Hong Kong companies like Chong Kong, which is the biggest property company in Hong Kong, and that's a strictly Hong Kong-based company. But they also obviously have a lot of properties in China. But so that's the kind of difference between the A shares, which is China. They used to have, or they still have a B share class, which was the way that foreigners were allowed to buy local Chinese shares. Now the B shares have completely become, illiquid because they've now allowed foreigners to invest directly in the A share markets. So it used to be a big currency control thing, and now the currency controls, because the renminbi, the local currency, is now an international SDR recognized currency. So there's as of last year, they've allowed Hong Kong investors to invest in China, China's investors to invest in Hong Kong. So there's been a lot of loosening of policy between the Hong Kong shares and the Chinese shares. So I think after all of that, I've just confused everybody a lot more.
I want to ask you, I mean, one of the things you just kind of said in a glance and kind of thought was the renminbi. Can you explain a little bit about that and how that kind of came about?
Well, the renminbi was a closed currency. It had very tight capital controls.
Relative to the yuan, or however, I can't say it properly, but
the yuan, the renminbi is the yuan. It's the same. They use the different words, but it's the same currency. The yuan and the renminbi are exactly the same, and and the government, as of I think 2-3 years ago, started really pushing that currency as an international currency, and and now it's been given special drawing rights, so SDR status, as one of the main currencies of the world. So in doing that, they have to allow the currency to free float a lot more and control it a lot less. That being said, they're still in the market pretty heavy-handed. Even the last couple of days when the renminbi's been going up, I think, the government's been pretty heavy-handed in that. So, yes, they have special drawing rights now, but I think they're less heavy-handed than before, but still they're in the market.
Okay. Well, I tell you what, we're going to go to break in about 10 seconds. If you could come back, and I want to really talk about, this report and how I think we're going to have the report come out as soon as we get back on. If we could kind of walk and talk through that, that'd be awesome.
Sure.
Great. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're lucky enough to still have Joey Jong with us. And Joey, are you there? We've got a little action here.
Yes.
Yeah, see the notes kind of heading up a little bit. Not a violent reaction. We're looking at real-time quotes on the show here. This is a 60-minute. Pretty much a docile reaction. So take a wild guess what that means for the U.S. stock market. It's just happy times again, huh? Do you think this is sell the news type event no matter what on the S&Ps today? What are your thoughts here?
Yeah,
or what? I mean, yeah.
the S&P, it's right at the 70 something level, so it is a pretty big level, and it hasn't wanted to go through. So the notes haven't done anything, and it's hanging around where it was. Really.
Right.
Hold on one second.
Okay.
Yeah, gold had a 10-point drop just in the last hour or so, and 5-point drop after the news, and it's kind of bouncing a little bit from here as well. So I don't see much reaction on this news. It doesn't look like much is moving. I don't think you're gonna get a huge down leg on the S&P. I think most people are trying to get their position in there. So they'll be buying on dips, I believe.
Yeah, I'm showing gold on a weekly right now, and one of the things, was kind of thinking about this morning, and talking about earlier when I was stuttering and stammering trying to get through the opening of the show, was 1264 is that big area. I mean, I know you and I look at the same levels. Do you think we have a chance of closing above there? Do you think this is just going to be a muted reaction to no real, difference in what's going on with the treasuries right now, and we're just going to kind of range around here still? Or what are your thoughts on gold?
I mean, gold has had a big move. We're probably going to pull back to 1240. We're not going to see more than a 1% pullback. I don't think. I still think that we've made so much technical progress on the weeklies. And we haven't seen this breakthrough in years in gold. I haven't seen gold behave this well in years. So any pullback, I think, is still a buying opportunity there.
Right. So let me go into the scanner really quick, and let me just go to the gold sell structure over here. So there's that 1264 top of the profile. You're seeing top on the weekly there as I'm showing it. And then there's the daily, obviously well above profiles. No hints of new profiles appearing yet. We don't have any yellow peelbacks. And that's the 240. So right now, top of the profile on the 240 is 1249. So right now, when I go to the kind of level of the market, so to speak, we're really not near any inflection points whatsoever. So we've come down below the weekly unfair highs, which is kind of a waiting game now, I think, for long. So you've got 49 and 75 to really focus on, in my opinion, if you're going to play around with gold today. And right now we're just smack dab in the middle of that area, and we're coming gently down into that 49. I'm showing the chart right now. Do you think this is worth any type of a day trading pickup down here at 49.50, or just kind of wait until Friday's close? Really?
I think around 49. This chart continues to amaze me. So I'm gonna say that, just on the weekly POC, I'd be looking at. I'm sorry, not the weekly POC, because the weekly POC is down at the big support, which is 1200. Let's see. Hold on one second. You're looking at 49 as the 4-hour, the 240 minute
profile.
support.
That's kind of where the most recent breakout was.
Yes, exactly.
Okay.
Yeah, so I think it'll come back and test that, but and it's coming back there right now, 53.70, and I think it will hold there, because we've just made a lot of progress, and I still think that overall people are underweight gold. Most people that were diehard gold fans just sold, kind of not too long ago, because they were tired of waiting for it, and that's, I guess, why when you have the last seller gone, then that's when it takes off. So I still think that we're pretty well supported here.
Okay, so guys, looks like we're kind of looking at 49 as an inflection point to pay attention to. We're about $2 away from there right now, and 75 is obviously the top of the profile on the weekly, which seemingly that is becoming a big deal to gold right now. And if we close below 75, we're gonna, excuse me, I'm sorry, not 75, 64. If we close below 64, then that's going to be the new breakout opportunity on the long term. And you've got some support at 49 here in the interim. We've actually reached 50, very close to 49, got into that neighborhood and bounced a little bit here. So that's kind of the numbers to keep in mind today. Joey, let's go back to the notes for a second. Starting to have a little bit more of a protracted move down here. Yeah. And I want to show that, yeah. So
the rates are, the notes are going down, rates are going higher. In fact, crude is reacting positively to this report as well. So crude has been trading pretty well afterwards.
Right, I'm seeing that.
And actually, the one thing that I want to point out is copper. If you look at BHP, our good old friend BHP, which I haven't looked at for years because it's been on a really, really long downtrend. So the stocks that I would look at is Freeport-McMoRan and BHP. Two that nobody wanted to touch with a 10-foot pole before. But it is probably time to take a look at those again.
And, I'm showing copper. Showing copper right now. Andy and I were talking about this yesterday afternoon. It's the first time this really has broken stride in a long time on the long term. So we're back above 215, and we were thinking 250 could possibly even be in order for this thing. We're going to have pullbacks, but I mean that's.
215 was the magic breakout, number.
Yeah.
I bought it at around 220, 221, 220, and I'm just kind of averaging in more at this point because I just think that copper's been and if you look at some of the other, so right now. All the massive laggards are coming back. Yeah, let's talk about some of the lagging industries.
Yeah, can you hang out till the next break? Because I wanted to go over a couple more things with you. Okay, great. We'll be right back, guys.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And Joey, are you still with us?
Yes, still here.
Okay, great. I was trying to pull up my currency server there, and it's acting a little slow here. So the gold here really has hit that almost to the tick. We reached 50.1, and the level's 49.3. In a volatile situation, you've traded these levels along with me, and you know what the drill is on them. You kind of, in the volatile states, you got to be willing to kind of play around with a little bit of a neighborhood around these levels. So it's interesting how this works out. So it's and
to get it within a point.
Yeah. Actually, less than a point, like 80 cents, I think.
Yeah, but, within a point, you know.
Yeah,
that's pretty
exactly.
Good.
I tell you what, I showed copper earlier, and again, just kind of proof in the pudding that a lot of these commodities are across the board are starting to show some more than green shoots, I guess. Let's go back to the S&Ps really quick, if you don't mind.
Yep.
Are in your opinion, any possible bad news might be over, I guess, with a relatively docile report there, or markets like no unknowns. Do you think now 75 could be looked at as support, or do you think this is just kind of too many people getting too happy at the same time, and we might dive back below and back into that balanced area on the weekly? What are you thinking? Or is this even a trade to worry about and just pass on right now? On either side.
Yeah. I was just looking at the Shanghai index,
right.
and it's run up. The Shanghai and the Hong Kong index both run up right up against the weekly resistance levels. And I had a little rebound from obviously, taking into account the strength in the U.S.
Right.
And I think it is at a resistance. Let's see how the S&P closes today. I don't think that people are going to be talking hawkish Fed, even with these numbers or anything like that. So, so that's, I think S&P is fine, and then you're going to have 1974 as the support now.
Right.
And
well, I'm showing the Hang Seng. I'm showing the Hang Seng right now, and E-Signal's a little weird because it starts a new. This is our weekly. It starts a new week on the dates, which are kind of weird. It's actually showing March 7th already on Monday morning here, showing the Hang Seng futures. But yeah, I mean, could this kind of break stride and head north too, or do you think we just have to kind of wait and see on these Chinese and Hong Kong indices?
No, I think if the S&P is able to close here, 1992 is where the the S&Ps are trading, then that would be very positive for the markets in general.
Okay. All right. So you were talking about BHP earlier.
Yeah. So basically, with these markets breaking out, what I want to do is focus on really lagging sectors, right? So biotech.
Right.
3D printing.
Yeah, you were high on that before.
Yeah, I was high on that before, and and as soon as it broke down, you get out, and it broke down in a big way, and now it's really bounced, almost 70-80% from the bottom.
Right.
But because it's gone down so much, it's actually when it's bounced this much, it actually means that it's breaking a long-term downtrend. And the other, and then the commodities like BHP.
I've got BHP up right now, 2432, bottom of the weekly profile. Do you think we could have a chance of just kind of put ourselves in a user
up
stamp?
To 2627 today, I think. So,
Wow. Okay.
Yeah. So I think this thing is on the break.
Okay. So
yeah.
It looks like on that particular type of trade, we could easily go up to 31 and still be within kind of a trend down situation in the long term. So if you guys out there are looking at BHP, looks like we might be able to have a stop oriented situation below 2432 with an upside, based on this commodity kind of change possibly in tone here, up to 31. Decent risk reward. I like it a lot.
Yeah.
What was that 3D printing company, the symbol, or one of them?
SSYS and DDD.
Okay, let's take a look at these. Wow. Sheesh.
Yeah. and then also solar stocks. With oil acting quite well, solar stocks has actually been underperforming still. With Solar City had a big move yesterday. I think they had numbers out. I'm not quite sure. I didn't take a close look at it, but the rest of the sector is still kind of lagging, and I really like that sector into a bouncing oil.
Gotcha. Yeah. And the theory there is obviously higher oil prices. A hint of higher oil prices will increase solar sales possibly, but
yes, exactly.
My goodness, yeah, it's a little ways off.
Tesla's been acting pretty well also. So that's the other kind of alternative energy.
Gotcha.
Play.
Okay.
Yeah. So we're talking about basically all the biggest laggards on the way down will probably bounce the hardest on the way up. So this is the way that we're looking at the markets here.
Right. So playing a relative strength game is always a great idea, but when you start seeing some of these, Joey's pointing out validly that when you start seeing some of these things that have been beat up so bad relative to commodity prices and relative to oil in that basket, these may give you a real compressed time frame to really get a good pop. So that's an obviously great thought there. Let's can we look at something else that's I want to look at the financials really quick. Is this bond note possible trail off? I mean, I'm still kind of a fan that bonds and notes are going to range around a little bit. Like you probably think that there's going to be no real huge moves, as we talked about before. What is in store for the financials if that's the case, or what do you? Is there any reason to pile in any of these bank stocks now?
I think the other day I had mentioned that there wasn't really nothing compelled me to be piling into the banks.
Yeah, I remember that.
But the next day they had a huge bounce. So, I'm not going to comment on the banks today.
Gotcha.
I'm really just focused on the lags and the commodities related plays, because that's
right.
the area that's really breaking out for me, and And I think even with the notes, it's still trading right back to where it was before the announcement. So
right. Well, Joey, thanks for coming on today, man. It's always good to hear from you.
Thanks, John.
Okay.
Good to be on.
You're
Have
welcome.
a great weekend.
You too, man. Okay.
All right. Bye-bye.
We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got Carlos from California on with us. Carlos, are you there?
Yes, sir. Good morning. How are you?
Great. Good to hear your voice. How are you? I'm good. How are you?
Oh, very well. Thank you. And the reason I called Mr. John is I just short the Nikkei on the futures.
Okay.
And, I need your opinion about the general Nikkei market, if you can. Because I am short right now at 17,153 one contract. And I have my stop just a little bit above the high of today.
Okay, so I'm looking at the March contract here. You actually waited. I mean, if this is the first time you've played around with this on the short side, I commend you on waiting until we got up into this level right here around what is it, 17,000. What kind of time frame are you looking for this trade on?
Well,
are you talking about a date?
I actually look on the 15 and the 4-hour chart. And,
Okay.
I can see a lot of congestion around the 1700s, so I wait for the report, and I place my order entry, and it actually got activated. And I'm expecting actually, since I noticed this index follows very close the S&P, they look very alike the way they move.
Yep. Sometimes.
Yeah, pretty much lately that's what it's been doing.
Right.
I was expecting a place short around 2015 on the S&P, and I was waiting for the jobs report. And I don't have a position in the other ones, but I short this one, and that's my stop. If the S&P goes above 220, I'll trade 220 in the next 3 days, Monday or Tuesday. I may end up being activated on my stop, and I'll be out waiting for the next opportunity.
Where's your stop on it right now, if you don't mind me asking?
Yes, it's right above 17,015.
17,015. What month? What month are you on? June or March?
Actually, it's 17. I was looking on the YM. Sorry, it indicates 17,116. So my entry is 17,153.
Okay, so we're not looking at the Nikkei. We're looking.
It's NKD. It's /NKD, and it's Nikkei 25.
Okay, all right. Okay, so I apologize. I thought we were talking about the Nikkei 220. We're talking about the Nikkei 225. Is that what you're? Or no?
I can see only the symbols here, and let me click on it.
I tell you what. Let's do this. Let me give some let me give some comments on the Nikkei 225 futures, NKD, and then we'll. If you want to talk about the Dow, we'll try to cram that in too. So I'm showing the profile scanner. I'm showing the futures for the March contract. Now, if you'll notice, we're kind of below profiles in the weekly, but we're right up. We're riding up into the top of the profile, which is a nice, interesting trade on the daily. So I'm going to show the landscape chart here. We're right above. Got some congestion there, I think, as you were saying before. And I'm going to go to my charts here on the daily. And, you know, a daily close above here is going to be pretty not great. But I think you've waited patiently until you've had some really good leverage on your side. Make sure you put your stops in if this is the contract we're talking about. And you could have a nice little trade here. Thanks, Carlos.
Thank you very much.
Okay. Yep.
Thank you. I'll call you later. Thank you.
Great. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.